Welcome to the first episode of the PerFinEx community investing in 2023. 2022 is in the books, so it's time to recap and wish for a fresh start maybe. 2022 was one of the worst investing years ever. In some regional markets, like the US for example, the worst year since the Great Recession almost 80 years ago. Let's see in detail what happened in episode 17 of the PerFinEx community investing. Traditionally, we will start the video with investing news that are great for investors and news that are maybe not so great for investors. And afterwards we recap with the 3 portfolio updates, which we will devote a little more time today than usual. To recap, pro investing news. Last week we published a video explaining the changes Germany made for 2023. Every one of us can earn a lot more money now from salary or investing or real estate, so thank you very much for that, government. And you guys loved that video as well, so thank you very much to you too. The one change I want to emphasize here is that the tax-free threshold for capital gains increased from €801 per person to €1,000 every year. So every one of us can make €1,000 in profits, in dividends, in interest every year without paying a single cent in taxes. Even babies. If that's not a reason to start investing with your entire family, I don't know what is. Well, maybe the current downturn that we are having for many months now is something that can hold you back. But, and I explained it in episode 12 in detail if you want to deep dive. If you have a crash or downturn at the beginning of your investing career, and many of you are very young and invest for the first time, a declining market is actually not so bad. You just have to stick through it. You buy, cheaper while it's going down. And then once the economy and the markets pick up again, you leverage everything that you bought on the way down. Of course, we would all love to buy just at the lowest point possible, but that's simply not possible because nobody knows when and where that point is and will be. I said it in the beginning of the video already, US markets had the worst return since the Great Recession of 1929. The S&P 500 was down by more than 19% last year, the Nasdaq is down by almost 32% last year. Oof. The German market is a little better with only minus 12.4%. Why is that in the positive investing news, you might ask? Well, at some point, financial markets will recover again. They always did. Upwards is usually 5 years, followed by 2-3 years down, followed by 5 years up, and going on. It's always been like this and it will continue to be like this. The market will recover at some point, and every day that passes makes it more and more likely that the recovery will happen. I stayed invested with my personal money and continue investing, and I can recommend you the same thing. Otherwise, you might miss a great opportunity. What is of course not so positive for us investors is that the issues and the problems in the world causing the recession and the downturn still exist. Inflation that makes central banks raise their interest rates, the war in Ukraine, which also leads to higher energy prices. The world is an absolute mess right now. Even more than during the pandemic 2-3 years ago. And as long as these problems exist, a quick recovery of financial markets seems pretty unlikely. We'll see what happens. When the stock market goes up, everyone is super excited and thinks that the party will last forever. To the moon! When the stock market is down, everyone is in a bad mood and thinks the market will go down forever. Landing from the moon back to the earth, I guess. And especially here in Germany, with us Germans being so moody all the time, the crash prophets are coming out now to tell us the world will never recover. Some say our DAX 40 stock market index will go down below 10,000 points, which would mean another minus 30% from today's value. After investing for more than 10 years now, I can tell you one thing. Don't focus too much on the media, or don't focus on the media at all while you're at it. Your mental health will thank you for that. In the last episode of our community investing, we had positive stock market returns for more than 8 weeks, which usually never happens. It's super rare. And that's why I said you shouldn't wonder if the market takes a step back to relax in the next episode. So this episode. And that's exactly what the market did. So here are our 3 portfolio updates for December 2022. High safety investing strategy is about 70% in bonds, which makes it a tough task to achieve a positive return right now. Yes, interest rates increased, but that means the bond prices fall in value. And that's why we are down by about 2% in December last year to an overall minus since the start of our community investing in August 2021 of 10%. So basically all the profits from November are wiped out if you factor out the dividends from December, which were the highest in 2022, almost 60 euros for every 10,000 euro invested, leaving us with a total return since August 2021 of about minus 4%. About 8% in realized and unrealized losses, plus 4.31% in dividends. Since almost every one of you has monthly savings plans, your returns in your personal investment account will look much better because you bought cheaper and cheaper over the last months. Passive income investing strategy, the one most of you are invested in, came back in December as well, as I suspected in the November episode. But not as much, only half of the profits from November are wiped out. We are down 0.8% in December and 8% since the start of the community investing, so a little better than high safety investing strategy. You got a little dividend as well, Christmas present from Santa Axel, with almost 20 euros for every 10,000 euro invested, leaving us with a total return since the start of minus 4.8%, minus 8.5% in realized losses. That is the real estate ETF we had to get rid of earlier last year because it was not performing, and it was a good idea because it's down by another 10% since we sold it, and 3.5% in dividends. Last but certainly not least, the high return investing strategy, which declined as well, of course, by minus 1.46% in December, which is partly because of the dividend of exactly 30 euros for every 10,000 euro invested. But still, this is performing the worst because the tech sector is the largest in this investing strategy, and we said earlier that the Nasdaq, the American Tech Index, is down by more than 31% in 2022. So the total return of this investing strategy is minus 12.3%, about minus 15 from realized and unrealized losses, plus the 2.5% in dividends. I certainly hope the market recovers slowly but steady soon so I can report other, better numbers to you. If you want to invest together with us while the market goes up eventually again, you can open your free Fidelity investment account with the link in the description. Takes you just a couple of minutes. After that, you can identify yourself with post-ident or video ident. Let us know if there's any problems there. And once Fidelity is done creating your account, we will reach out to you so we can set up a meeting in order to discuss the right investing strategy for you. Let's all cross fingers that the market recovers this year, and Happy New Year, investors.